Hey traders, this is Blake Morrow with Forex Analytix, and you're listening to the week ahead video for October 22nd, 2023. I have actually a lot to talk about today. We're going to talk about, the move in the bond market. We're going to talk about some of the, what I'm looking for with the situation in Gaza. I'm also going to talk about some of the key characteristics in an aggressive sell-off, if, just in case we need to discuss that. But I'm going to start off with this. You'll notice right behind me, pricing of Forex Analytix. This is our discounted pricing. Well, we were supposed to take it down yesterday. We're going to leave it up through the weekend just so you guys and gals can take advantage of it, because this is the last weekend. You won't see these prices on Forex Analytix and to be inside of our community until probably sometime in 2024. So jump on it right now. Take advantage of these prices. Once this is gone on Monday, you can go back to taking your trial and paying, taking your trial $1 for 10 days, but paying full price. That's fine. But if you've been watching us for a while, this is your opportunity to get these discounted rates that only come by a couple of times a year. So take advantage of it, leaving it up through the weekend. All right. So I'm going to go ahead and move along and talk about a few things as we as I think is really important with what's happening right now. So first of all, I like to explain. I'm not a Middle East expert. I don't know exactly what the positioning is going to be, and I can't really. We can't forecast that. It's way above my pay grade, if you will. But there is one thing that I think we should be keenly aware of, and that's talking about, the hostage situation. As you all know, Hamas has, a number of, 200 or so approximately hostages, Israelis, Americans, and other from other countries as well. Something I said if you don't listen to the daily shows, so you can find those daily shows. Let me grab you the link really quick. We have the free flow show and the morning, or not the morning edge, but the face show. The morning edge is exclusive to the Forex Analytics community. When you're a subscriber, you get to go to that show. And same with the daily roundup. But the face show is the free one, and so is the flow show. It's also free in European hours. One of the things that I've talked about this week is that we have to watch the hostage situation, because if you see the hostages being returned back to Israel or the United States, that means Hamas is making concessions to a certain extent, right? Which will increase the risks of the tensions going down. And the reason why I say it's important, because on Friday afternoon, 2 Americans were released from Hamas. And right around the same time, we saw a rally at the end of the day. And, actually, I'll just show you here. Right at the end of the day in the S&P, let me show you right there. Okay. That rally was right after Hamas, or right as Hamas released those prisoners back to the U.S. Now, you can see we succumb to selling pressure at the end of the day. The market's seeing those types of rallies as just selling opportunities going into the weekend. But the reason why I bring this up is because I think it's a bigger issue. It's one that we as traders need to focus on. And like I said, I talked about it earlier this last week on our shows, but it's something that if you don't watch those and you only watch the week ahead video, it's something I want to mention. Again, I think that if you see some sort of negotiations happening and let's hope more hostages are released back to Israel, that means tensions are cooling, and the stock market and risk appetite in general or risk aversion, let's call it that way, may subside a little bit as a result. Again, I'm not a Middle East expert by any stretch of the means. And if you have any comments regarding that, please jump in the comments section below. If you have any, if you have any opinions, feel free to voice them there. But I just want to mention that observation that we've had this last week, and especially on Friday, and the price action that was associated with that. Anyway, moving along. So another thing I wanted to discuss this week is I want to talk about the massive move in the bond market, and obviously it's a big deal. And let's go over to the 10-year. The 10-year is on everybody's radar. You can see we hit the 161% extension. Basically, we hit 5%, and then we've receded from that, and that makes a lot of sense to me. Not because I think that the bond market it should be bought down here, but I think when you're in this downtrend and the bond market's offering such a great yield, not even the 10-year or the 30-year, but really on the lower end of the curve, like the 2s and 5s, that's attractive to investors, especially in a period of risk aversion. So knowing that 5% is such a big deal. For the 10-year, everybody's talking about it. And it doesn't matter if you could watch probably your local PBS super generic and conservative or not conservative, but generic news station that never talks about the markets, and they'll mention that the 10-year reached 5%. It doesn't really matter. Everybody's talking about it, but that is a kind of a barrier where people are starting to find value. All right. Especially in today's environment. It's not that things aren't happening. Things are happening where people want to park their money in some of the some bonds and notes where they might see less risk, if you will. And so that's why the 10-year is such a big deal. But what's more important right now is that we are seeing it really reverse from the 5% level. And it's not just a U.S. issue. You can pull up gilts, you can pull up boons, you can pull up JGBs. You'll see that that yields have been stronger. Even you start going into Japan, you're like, wait a second. You're seeing yields rise there too. It's a global phenomenon. It isn't just a U.S. situation. So, watch that, because if the bond markets globally start catching a bid, that usually is a sign of a little bit of risk aversion. And that goes to my next point. I want to talk a little bit about the characteristics of an aggressive sell-off in the market. Now, as I say this, this is where I'm going to say that experience really matters, right? And you'll have people that tell you, I've been in the market for 10 years or 15 years or 20 years or however many years they've been in the markets. There's a difference between those of us that have been trading the markets predominantly, like just sitting on a trading desk, for the last 2.5 decades, versus people that are just, I was in a Charles Schwab office as a secretary or a runner or something, and I was in the markets. No, there's a difference. There's a difference when you're watching price action in situations that the market is feeling extreme stress. Like for example, the great financial crisis, or the GFC. That's a great example of being in front of the markets and actually watching price action when the S&P traded to 666 that day, that Mark Haynes was out there that morning, and he called the Haynes bottom. Rest in peace, Mark Haynes. But I remember, that day, walking out that morning outside to get a breath of fresh air, looking around going, wow, I wonder if this is it. Are we going to collapse as a global economy, or is this the time to be buying? And I actually stepped in and started buying that day. But situations like that, or trading through, the unfortunate events of 9/11, and 3 days after that, when the markets reopen, and seeing how the markets react, and you're trading through those situations. This is where experience really matters. Or when the .com bubble bursts. Or somebody who's traded through the the crash of '87, which I did not, by the way. But having that experience of watching price, trading through it, going through the drawdowns, that's what's really important. And that's where the Forex Analytix team really has a lot of experience in that. That have been trading on desks as that's happening. And one of the key characteristics. And I want to say this, actually, before I even tell you this, if you do find these videos beneficial, make sure you give our team a thumbs up. It is Saturday morning, early morning actually, because I have to drive across the state once again for a football soccer tournament, and so therefore I'm filming this at like 0 dark 30. It's actually still the sun's just barely coming up out here on Saturday morning, and so our team's going to work to get this out to you so you can watch it throughout the course of the weekend. So if you find these valuable, give us a thumbs up, please. But the point is, and what I want to try to get across here is there are some key characteristics when the markets actually sell off aggressively, and I think we need to be prepared for that. And one of the things that happens in a period of risk aversion is you're going to see the markets act like I like to call it like a relay race, or passing the baton, because you'll see the bond market catch a bid. You'll see the bond market start to bottom out, and you'll be like, well, that's great, but gold isn't really going up, or maybe the dollar's not really going up, so maybe it's not really risk aversion. It's kind of stealthy, right? And then all of a sudden the bond market stops rallying, and then next thing you know, gold starts moving, and you see gold, which by the way has been a really great indication of some risk aversion in the market, and I'll come back to these charts. Specifically, but you'll see that gold, starts to rally. Then gold will stop. Then next thing you know, you'll start to see the dollar, take the baton, and you'll see the dollar move. And I know a lot of people are observing the dollar, saying, "Hey, the dollar hasn't really been moving right now, so maybe the market's not really risk averse." There's other assets that are moving, guys, that are showing you that the market is being stressed. Another one, if you don't know, is the U.S. dollar Swiss franc. Or the Swiss franc in general. Like I've had an Aussie Swiss short going for the last week and a half now. And the reason why I'm doing that is to protect myself. You look at things that are moving like this, like the Aussie Swiss moving lower. Why? Well, it's because the Swiss franc is being bought. And the Swiss franc isn't going to just continue to be bought. It'll probably stall, consolidate, and when it consolidates, it hands off the baton to the next runner, and off they go. So I want you to be thinking about that just in case things get a little bit more heated. Are we at risk of that? 100% we are at risk of that. Is it going to happen? Let's hope not. But as traders, we need to be prepared for these situations. That's why when you look at the dollar and you're like, well, dollar hasn't gone up, and you've seen the S&P come off, and so the dollar must be a short. The dollar just might be, taking a breath before it gears up again, especially if things start to spiral out of control. And when that happens, that's when you have to start being really careful. All right. So anyway, I wanted to point some of those things out to you. And like I said, if you find this type of information valuable, make sure you give me a thumbs up. Comment down below if you want to add to that as well. So let's talk about some of the things that are going to happen this next week. So on Monday, we're going to be watching headlines. Obviously, Sunday we're going to be watching headlines. And actually throughout the course of the weekend, we're going to be watching headlines, seeing what is driving price action in the market. So that's going to be really Monday. Monday we don't have like a real any real big news that's coming out that will be a big market driver. But on Monday night, which is obviously Tuesday morning in Japan, we do have the BOJ core CPI. Now, I wouldn't be super worried about that on that CPI, and you can see the dollar yen's just kind of poised right at this 161% extension. I wouldn't be super worried about there are a couple pieces of inflation data. There's the that inflation data, which will be Monday night, and then also on Friday, I think we get, if I'm not mistaken, we get Tokyo CPI. But just be advised that the BOJ is releasing 2023, the remainder of 2023 and 2024 inflation forecast next week. So whatever we get this week from inflation data from Japan it might not be as important because everybody's going to say, yeah, that's great here, but I want to know what the BOJ is thinking, forecasting, because that's going to tell us a little bit more about monetary policy moving forward, what the BOJ may or may not do. All right, so moving along. Okay, early Tuesday morning. Let's this is, it's middle of the night for me. But for a lot of you that live in Europe, you're going to have the UK unemployment claims, or they call it the claimant count change. We've been talking about the pound here, and the fact is, and let me grab this red line right here. What I think we're doing is we're doing a bearish wedge at the moment, but you could also take that trend line and kind of move it like this, and maybe it's more of a triangle. I would just keep an eye on these lows. I think these lows are going to be really important. What's most important about the technical setup with the sterling here is you are seeing only a 38% retracement bounce, and I know we talked about it last week. That's why I had that little highlighted box right here. That, because we rejected, and we talked about this last week. Go watch the week ahead video from last week in case you missed it. Just go check out last week's video. We talked about this 38% retracement, and I said last week, as long as we stay below that, we have to continue to be bearish. And you can see we continue to consolidate lower. Now, stocks have moved down, and like at the end of the week, you saw some sterling buying at the end of the week. Well, that's probably because a lot of the sterling crosses are moving. You look at the pound Aussie, the euro Aussie, or pound Aussie, pound New Zealand. You're seeing some of that risk aversion seep in, and it seeps in when you start to see commodity currencies act as risk currencies, and that's important to note. Moving forward. All right, let's get rid of that 38% retracement. So we know that support is at 2040. Resistance is, it's going to be around 2275, by the time we hit that trend line. But that's going to be really important. We have UK, also that same morning, a little bit later that morning, we have UK flash PMIs and Eurozone PMIs. So again, this is, you're talking about the sterling, where the risk is, and kind of what we're filling in is this bearish wedge for right now, and it's bearish until we break above that trend line, if we break above that trend line. And so PMIs going to be in focus, claimant count change, all Tuesday morning. Now, Tuesday morning also, like I just said, the Eurozone PMIs are coming out. Now, we have something happening this week that's really important with the euro. We have the ECB meeting, which I'm going to talk about here in a second. There's actually two major central banks that are meeting this week. We have the Bank of Canada, which I'm going to talk about here in, just before the ECB. But, we have these Eurozone flash PMIs coming out. Now, when you're looking at this chart and you go, well, Blake, we broke out of this, this channel. So because we broke out of this channel, it's bullish. Just to address that, you see this green breakdown point comes in at 106.30. We have to get back above 106.30, 106.50 to turn bullish. I was talking about this on Friday on the Face Show and also on the Morning Edge. I'm like, because we broke this channel and we didn't get any immediate follow through, and you guys know why. I mean, it's obvious, right? It's painfully obvious. What's happening in the Middle East has people very worried right now about selling dollars and buying euros. There's a lot of clouds surrounding the Eurozone in general. Think energy, and think about the Middle East, and things intensifying, and then next thing you know, you have an energy crisis and an already crippled Eurozone economy. It's a disaster waiting to happen. So yeah, do I really want to be long euros in that situation? Nah, probably not. And people are like, well, the dollar hasn't really been moving, so I don't really want to buy dollars. And if I don't think there's going to be a big war, so I don't want to necessarily be buying dollars right now, right? So that you get that push and pull. The fact of the matter is, technically, you didn't see the euro actually rally coming out of that channel. You can see the channel right here. It didn't follow through. So the reason why this is so important is because I almost think at this point we can delete this channel. I'm not going to do it just yet. I want to see what happens this week. But we have to be on guard now. Now we have to be on guard that the dollar could really sell off. And here's the thing. What would really be the catalyst to the euro really rallying here? Yes, we have the ECB, but more importantly is just the tension subsiding. That's really, that is really what's holding back the euro, in my opinion, right now, because there are a lot of risks, especially if things do get a little worse in the Middle East. So I'll come back to the euro here in a minute. But also it's Tuesday around the same time, RBA Governor Bullock, she is speaking. Now, this is going to be kind of important because I don't know if you guys saw, but you probably did. The RBA minutes this last week, were pretty hawkish. Now, the Aussie spiked up and then it just gave it all back towards the end of the week. Why? Because we're in a pretty dicey situation globally. So you could see why the Aussie is going to sell off. But you got to keep an eye on what Bullock is saying, because she's speaking at the Commonwealth Conference in Australia, and this is going to be her first major speech as the new governor. So it's going to be closely watched. So if you are trading the Aussie dollar in any way, shape, or form, like for example, I am long the Euro Aussie. If you didn't know I was long the Euro Aussie, well, you're not in the Forex Analytix community then, because I've been long this. Well, I've also talked about it on the trade off. It's like my trade to the play of the day like a week and a half ago, on the Pepperstone show. Anyway, I've been buying this and I've been trading it long for here, right? By the way, we are at the 618. If you haven't seen it, this is there. I just gave you a little freebie. We're at we stopped at 168. But I'll be watching this really carefully because I do have Aussie exposure. I may not be short Aussie dollars, Aussie this one. I can't. It's early in the morning for me. I may not be short here, but I'm short Aussies in other ways. So I'll be watching Bullock's talk, RBA Bullock's talk I take that back. I'll probably be watching the headlines because I think I might be sleeping at that point. Okay, moving right along. What else is happening on Tuesday morning is it's PMI day. We have Eurozone PMI, we have the UK PMI, as I've explained. We also have US PMIs that are coming out. And let me pull up the dollar really quick. Now, let's talk a little bit about the dollar index, because the dollar index is, in my opinion, consolidating its recent gains. Now, let me delete this because those are my drawings from Friday. Most of these instruments that you see here on my right, I leave them for the week ahead video. I specifically leave them for the week ahead video. There are a few instruments like the dollar index that I draw on throughout the course of the week on our other shows. So that's why you'll see it, shift from one week to the next. You'll see my drawings kind of flip around because I'm updating them throughout the course of the week. When I show you like the sterling trade, the sterling chart, this is the same chart you were looking at last week on this week ahead video exactly 7 days ago. So again, it's just because I share, the dollar index, there's only so many feeds to watch. So I have to, I draw on it throughout the course of the week. Anyway, this is how I'm viewing the dollar right now. So we are in breakout territory. Don't forget that. As long as we're above 105.85, we're in breakout territory. But you can see this is a support zone that I'm closely watching. And I don't know if we're developing like a bull flag pattern or we have a bullish pennant, which is entirely possible, right? I was using the analogy earlier this week on the Face show. It's like Usain Bolt, sprinting, the 100-meter, and then he's resting right now, right? It's like that's what the dollar index did. It ripped shorts heads off over the course of the last 3 months, and now it's just taking a breath, and all you have to do is sprinkle in a little bit more risk aversion, and the dollar index is going to be trading above 107.25. That's plain and simple. But I don't know technically if we're developing a pennant or if we're developing more of a bull flag. That's to be seen. But I will say this once again: while we are above 105, 85 and probably 105.50, there's no reason to be bearish right now. The dollar. We have no real reason. Can we get some reasons this week? Sure. What's happening in Gaza? What's happening in what does the ECB have to say? That's going to influence the dollar index. We also, at the very end of the week, we have PCE data, which I don't think is going to be super important. I know it's their biggest inflation gauge, yada yada yada, but I'll tell you the reasons why when we get there. All right. So anyway, dollar index. I think that's the consolidation we're looking at. Moving along. Also on Tuesday, we have Banxico. Now we got to keep an eye on the dollar mex. Okay. We have Banxico's mid-month or bi-weekly CPI data on Tuesday. Obviously, the dollar Mexican peso is at risk of breaking out above 1850, right? This you remember this? I drew that last week. Was it last week or 2 weeks ago? Yeah. Really important, right? Really important. You can see how vitally important it is considering the fact that we stopped there twice at 1850. Twice. But notice that we're holding above the 200 DMA. That means the market's nervous. When you're seeing an emerging market currency holding up well in this environment, that means the market is somewhat nervous about risk aversion, geopolitical tensions, that type of thing. So, mid-month, bi-weekly CPI coming out. Just keep an eye on it because could that be the catalyst that drives us above 1850? I don't think so. I think what drives us above 1850 is more geopolitical, but I may be wrong. But that's my best guess right now. Okay, moving along. Tuesday night. Going back to the Aussie really quick. So Tuesday night, Wednesday morning, I forgot about this. We have Australian CPI. So let's talk more of the technicals in the Aussie dollar because we have Australian CPI. Now I know what you're thinking. You're like, man, the RBA seems pretty hawkish. But how about? I don't know if you saw it last week, but the New Zealand CPI, I shorted I'm still short Kiwis. All right. New Zealand CPI came in well below expectations. So everybody's going to be watching Australia CPI because they want to know if that was a New Zealand phenomenon or is it an Antipodean regional phenomenon. And now I know some of you that are in Australia, you may have something to say about that. Jump in the comments below and talk about it. Because I'm a boots on the ground kind of guy in the United States. I don't live in Australia. I'll try to follow it the best I can. But I only know what I read. So maybe you might have a better idea of what's happening in Australia. But I will say, I'm sure you do. But what I'll say about this is New Zealand's CPI caught everybody off guard. So watch this Aussie CPI. It will be Tuesday night for me, Wednesday morning if you live in Australia. So keep an eye on it. Yeah, I think you can clearly see we have a bearish wedge developing. And that's something that I've been talking about on the Face Show, and you can actually see it right here on the Aussie dollar. You can look at the 4-hour chart. You can, the daily chart here. You can clearly see the bearish wedge that we have been talking about. Okay, and you can see the bearish wedge that we've been talking about on Forex Analytix. So you've already been well versed in this development already if you're a Forex Analytix subscriber. All right. By the way, did you know there are other ways that you can take advantage of Forex Analytix and get it for free? A couple ways. Let me just share with you. If you decide that you don't want to go with the pricing discount that is so rare that we do that. If you've been listening in for a while, you know that. One of the other ways you can get Forex Analytix for free is if you have a TradingView account, or if you get a new TradingView account, you can see those are the charts that I use. If you pick up one of their TradingView account packages, we have collaborated with them, and you get free Forex Analytix for a period of time, depending on what you sign up for. So right here is where you open a TradingView account. You have to open up, it has to be a brand new account though. It can't be like a current account that you have with TradingView, just FYI. Also, you can take advantage of Forex Analytix by joining the Trader Funding Program, right? So if you join the Trader Funding Program, and you know, which in this volatility that we're seeing right now, if you're like, I don't even want to risk my own money, fine, don't. See if you can actually trade a larger account, trade somebody else's money, right? So check it out. If you want to learn how to access a $25,000 account, or a $50,000 account, or a $100,000 account, or $1 million account, if you want to trade larger amounts of capital, but you don't want to risk your own capital, this is a great way to do that. And while you're doing that, you end up being in the Forex Analytix community as well. And that's a really, really great place to be, to talk about different things. You know, I was going to talk about, which I'm not going to do at this moment. Well, I mean, I can, but you know, one of the conversations that we were having on Friday, which I thought was it was a Friday or Thursday, which was such a great conversation. This is the Forex Analytix chat room. I'll see if I can find it. Not the discussions. These are the threads. One of the things, let me see if I can find the conversation here. There was a conversation, I believe it was on Thursday, that one of our traders were asking about, like, you know, I don't think this is it. Andrew was talking about learning about trading and being in our community. There was a conversation. Oh, here's a great conversation. And hey guys, what's your thought process determining determining you know, how much risk to take? And take a look at all the comments that are filling in our chat rooms regarding that. Okay, this is a really great community because you get input from so many different traders about, oh, you know, I'm taking on too much risk. What is too much risk? You know, it's not just, you know, what charts are you looking at, and what are you trading right now, and you know, what positions are you in? It's all about having a community of people to talk to. And I think that's probably one of the things that, if you trade from home, it's probably one of the things that you might miss the most from being on a trading floor, or one of the things you've never experienced is being inside of a community. But being able to talk to other traders about how they're viewing the markets, why they're viewing it a certain way, not only, you know, what are you buying or selling? That's only part of it. The other part of it is having people to chat with that are like-minded, that are trying to make money in the markets, and maybe have more experience than you, that can share some of that knowledge, you know, not just ideas. So anyway, I could go on and on and on about that, but take advantage of the price discounts or trader funding program, or, you know, going through TradingView, several different ways to do that. Okay. We got to move along though. We're going to get away from the Aussie CPI data. Just remember it, you know, everybody's going to be watching it because of what happened in New Zealand this last week. Now let's talk about the Bank of Canada. This is one of the central banks that's meeting this week. Now, why is this important? Well, reason why it's so important, as you all know, and let's go over to the weekly. Well, we don't have to go to the weekly. Here's the daily chart. You can see the channel we're following, right? And last week we said, hey, we're in a range. Be respectful of the range. Let's delete that. Well, you know, let's just note that we're still inside that range. Okay. But notice that we're up against major channel resistance. That comes in at 137.50 now. You know, roughly 50, 60. You guys see it. And really above 138, it becomes really bullish in the dollar Canadian. This is really important because the market is, I would say half the market, the expectations are about 50-50, that the Bank of Canada keeps rates on hold or hikes, right? There is a press conference. So this all really matters, because if you get a hike and you start to see the dollar Canadian come under pressure, and you're like, oh crap, I can sell dollar CAD, and the Bank of Canada is raising rates one more time. There might be a little bit of repricing there, but you have to wait for the press conference. There will be a press conference. It's not just a statement. They are having a press conference this week, so it's going to be really important. The flip side is, if they don't raise rates, is there a risk right now that the dollar CAD breaks out of this channel resistance? Yeah, because one of the reasons why the dollar Canadian has been held up is because crude oil has been strong for obvious reasons, right? Disruptions, energy disruptions, Middle East conflict, all those reasons. So that's kind of held the dollar Canadian from breaking out. But Bank of Canada this week, that is a risk. That's something that we should all be paying attention to. That is on Wednesday. Now, also on Wednesday, we have Powell. He is speaking. Now, he is speaking, but don't expect what we got this week, because he is delivering opening remarks at the Moynihan Lecture in Social Science and Public Policy in Washington, D.C. So chances are he's not going to be talking about. If I was Fed Chair Powell in this environment right now, I would try to talk the least amount of monetary policy as possible when put in situations like that. I don't think that's going to be a market mover at all. I may be wrong, but I don't think so. Thursday, we have the ECB meeting. Now, now remember for Thursday, and let's go over to the euro really quick. Let's just discuss this and why this is important. So, remember the way that we haven't changed time or done daylight savings times yet. It's coming up though. It's coming. I have to go look at the date because it's really important for me, because this time of the year, when it comes up, I tend to get like 1 hour more of sleep because of where I live. I live in the state of Arizona in the United States, where we're one of only a couple states that do not change our clocks at all, ever. We don't adjust for daylight savings time, which is great because I never have to change my watches or my clocks. But the bad news is 7 months out of the year, I get up a little earlier than I'd like. So anyway, there's neither here nor there. But what's important about the ECB meeting is that the ECB meeting, the statement happens, right? 15 minutes later, we have durable goods. Most important data, I would say data point this week, most important data point is US GDP. That is Thursday. It's sandwiched right in between the ECB statement and the ECB press conference. So we have US GDP, durable goods, unemployment claims, and then we have the ECB press conference. Now, talking about the ECB press conference and why this is going to be very important is because people are speculating that in which, this is a good speculation here, right? That the ECB might start fiddle-faddling with its PEPP program. Now, remember, the PEPP program was the emergency program that the ECB used following COVID, the COVID lockdowns. I think their portfolio is 1.7 trillion euro, I believe, somewhere in that neighborhood. So rather than the ECB adjusting monetary policy, what they're going to be fiddle-faddling, yes, I said fiddle-faddling, what they're going to be fiddling with is probably its balance sheet instead of delivering like another interest rate hike. So what they're going to be doing with the Pandemic Emergency Purchase Program, or better known as PEPP program, going into the end of 2024, that's probably going to be on what traders are going to be listening, or that the market's going to be listening for on Thursday. So just keep that in mind. It's going to be really important as we have the ECB press conference. And I already went through the technicals on the euro, but here's just what you see is what you get. While you're below 106.50, you have to be really careful about being long the euro. That's your bull bear line. 106.50, 106.30, 106.42, 106.40, and 0.5 of a pip. I don't care what number you say. It's just right around there. That's an area, right? That area is where it separates the men from the boys, the women from the girls, the bulls from the bear. I'm joking about that. But anyway, that's the bull bear line, really, is 106.30 to 50. Okay? That's going to be where the market's looking. All right, moving right along. On Friday, Friday morning in Japan, and it will be on Thursday night. We'll have Tokyo CPI. But like I said, I think the market's going to be looking for, and let's talk about the yen for a second. The market's going to be looking for the next week's inflation forecast for 2023, 2024. Notice how the dollar yen is just kind of stuck, right? This is one of the things that I do want to talk about, because we are just nudged right up against 150 level. You know, you can see it just clearly. Oops. I have to move that down in order to draw that horizontal line. Okay. You can see we're just nudged right up against this 150 and a quarter level, 150.20. And the BOJ, you know, they talk a lot. The Ministry of Finance have been, you know, making comments, but to be frank, they're probably looking at the dollar yen thinking, hey, you know, we've seen when yields have gone up, dollar yen's gone up, yields have been going up and breaking out. Dollar yen hasn't really done anything. So maybe we might get let off the hook here if yields start to reverse and we see bonds come back into favor. We might see the dollar yen come down. Who knows what they're thinking, but they're probably like, hey, wait a second. We've got this kind of contained around the 150 level. We don't have to intervene just yet. So I say just yet. I'd be watching this as a bullish wedge. You know, when you have consistent highs and higher lows, it's a bullish wedge. Now, channel resistance, you can see this channel is very clear, right? It's a little messy. You can go, you know, through some candles or whatever, but you can see the trend obviously is up. Do you guys see that? It's obviously higher. So right now, they're you know, I like to trade it on the short side, the dollar yen, but there's no real reason to be like, oh, I'm, you know, bearish dollar yen. It's going right back to 143 right now. I mean, technically, there's nothing that suggests that. If you want to take a pop shot at the dollar yen, you do it current levels and you put your stops above 150.30, or you wait for channel resistance to be tested around 152.50 and then you look for a short. You know, if you're going to trade on the short side, you kind of got to know exactly what your plan is, because it is counter trend. That's the point I'm trying to make. Okay. So we are up at the 161% extension of this previous Gartley pattern. So just keep an eye on it. And remember, on Friday, we have some important, well, semi-important, I think. We have PCE data. And even though PCE data is coming out and everybody says, well, that's what the Fed is mostly focused on as far as inflation goes. Yes, true, but don't forget that the CPI data came in really strong, and we've had just strong data just overall. So even if the PCE is a miss, you might see a spike down in the dollar, but like kind of like this, you might see a move down in the dollar yen, you know, dollar, just any which way you're looking at it. And it's probably just going to get bought up again because the data has been so strong as of recently. And we also have the University of Michigan consumer sentiment data also on Friday as well. Oh my gosh, I just looked at the time and I realized I've gone through so much and I've spent so much time talking today about the markets, and I haven't even gotten to the S&P. Or the DAX or gold or yen. So remember, you guys can catch like how we feel about all the indices and about all the different markets. I know I talked a lot earlier about kind of, the characteristics of a sell-off, but I think that's important data right now, or information right now, based on our current environment. So let's talk just about gold really quick. Notice how gold spiked up and we probed the 618 and we're failing up here. Now I say failing, and I say failing loosely. We are risking right now that we got a false breakout in gold. Now, I think bulls probably didn't want to completely press going into Friday, because obviously it's the weekend. Maybe things cool off. Maybe calmer heads emerge in the whole, in Israel and Gaza, but that's all we all hope for, right? But gold it's showing you right now it's a little nervous around that 618 retracement, and we got a possible false breakout. Also, if the dollar takes off for whatever reason, gold might be at risk of a reversal here. I wouldn't be shorting gold personally, but I think if you're long gold and you just witnessed a 10%, right? That's about a 10% move off the lows. Yeah, you witness like a 10% move off the lows in gold, and you're long, and you're a trader. Yeah, taking some profits off the table probably makes sense. Because you don't meet you don't meet broke traders, or wait, how's that? Rich traders don't go broke taking profits, something like that, right? So, or you don't go broke taking profits, right? Book some profits, move your stops, protect yourself if you're long. Yeah, but I still think gold looks bullish, but we are at some key levels here. So let's just keep that in mind. Last I'm going to leave you with, and then again, if you want more analysis on the markets, just join us on our daily shows. Remember, it's the Face Show. It's you just come here every morning. Come here. You'll hear from me and the rest of the team on the Face Show. And also, if you're up during European hours, go to the Flow Show. That's where you have Ryan and K-Man, breaking down the markets, getting you ready for the trading day. If I happen to be sleeping, but if you're up during those hours, you should be listening to the Flow Show. It's great. So they jam pack that show with so much information on what's going on, why the markets are doing what they're doing, and what's coming up later today, and how they're thinking about things. So it's such a great show for anybody that trades the markets to get prepared. All right, last thing I want to go over is the S&P. So obviously, we closed below. Now let's take a look at something really quick. We closed below the 200 DMA. So obviously the 4,200 level is at risk. Now you guys know that the 4,200 level, the reason why it's such a big level, it's because it's a 38% retracement of this entire move. So this is the determining factor. Let me grab my drawing tool here. This is the 38% retracement of this big move is right here, 4,200. So what's determining factor of whether the market goes into full-on retracement mode or we stay in a bullish, we're in a bullish trend mode, is the 38% retracement. That's kind of like the do or die for the markets from a technical standpoint, because when you have a 38% retracement hold, like what you see here at 4,200, if that holds, that means that the risk is that we have a continuation of this trend. Once you break below the 38% retracement, then the risk becomes that you're in a more of a range bound environment, or you can completely reverse, and next thing you know, you're trading 3,200. Obviously we can't foresee what's going to happen there. You have to have alternate scenarios based on what you see technically, because as you've heard me say for years and years and years and years, I have a hard time figuring out what's going to happen 15 minutes from now in the markets, let alone what's going to happen a month from now or 2 months from now. There's so many variables, especially in this environment, that what we know right now, what we know at this moment in time, is a 38% retracement is important. We are below channel. We're below that channel support, and we close below the 200 DMA. You can even go to the E-mini futures, and you'll see that we are below the 200 DMA. So that's a risk, guys and gals, and I think we got to be watching this 4,200 level very carefully. I've heard on financial news networks, we are so oversold, but if you look at a daily RSI, we are not oversold. And just because we might be oversold intraday doesn't mean we can't become more oversold and oversold before we even get to oversoldest. So just because we're oversold doesn't mean anything. Believe me, somebody who's been through, pretty big capitulations in the market. Oversold can become way more oversold than you think. So with that being said, I want to say, guys, gals, if you appreciated this video, you appreciate this update, this very long video, give me a big thumbs up. I'd appreciate that. And I want to say thank you for spending your time with me, because this is a long video, and this is over the weekend. I know your time is very valuable. So hopefully you found this video as being value to you in this next week of trade. Thank you. Have a great remainder of your weekend. I'll see you Monday morning on the Face Show. And remember, don't forget to take advantage of the price discounts on Forex Analytix. They will be gone, and you will not see them again for a while. Thanks, everyone. Have a great one. Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.